What's up everyone? So in this video, I'm going to be talking about sponsorship, and just a disclaimer before we start, I do not claim to have invented these concepts, and all of these concepts root back to ICT's teachings. So now starting here with sponsorship. So what is sponsorship? Sponsorship is how you're going to catch high probability continuation or redistribution. So looking at this diagram here, what can you see? You can see that right here we have swept major buy-side liquidity and we are delivering from a 4-hour bearish fair value gap. So this is our high time frame manipulation where our buy-side objective has been met. We have generated tons of sell-side liquidity along the way and we have a major sell-side objective below. So after we get our initial high time frame manipulation, likely there was a initial inversion which was going to be the best possible trade to be taking to catch us move lower. But the sake of this video is in the scenario that you missed that initial inversion. In the case that your sell side objective is still intact, this is how you're going to target it. So after we get this high time frame manipulation, we get our initial displacement or distribution off of this, right? So let's say that our sell side objective is still intact. After we get this initial distribution or displacement, this move lower was sponsored off of this high time frame manipulation. Yes, this whole move lower, this whole leg of price action is sponsored from our high time frame manipulation, not just this fair value gap, this whole move lower. So now, after we get our initial distribution or displacement, we then get a retrace into, for this example, a high time frame PDA, such as this 15-minute bearish fair value gap. So this is the high probability area for a continuation model to meet our sell side objective. Now let's say that we got an inversion right here off of this 15-minute bearish fair value gap, which is sponsored from our high time frame manipulation. This is a beautiful continuation setup to be targeting our sell side objective, right? So now along the way, after we hit take profit, after we entered our trade off of this inversion right here, let's say we then displaced toward our sell side objective, right? So now our sell side objective or our major objective has been met. So right here, let's say we created a 5-minute bearish fair value gap while running to our full take profit off of this 15-minute bearish fair value gap. This is an inconsequential area to be looking for prices lower. Because first of all, this gap was created from lower time frame manipulation. This 5-minute bearish fair value gap was not created from this high time frame manipulation of this 4-hour bearish fair value gap. This 5-minute bearish fair value gap was created from this 15-minute bearish fair value gap, where our sell side objective has also been met. Therefore, if you are taking a quote continuation model off of this 5-minute bearish fair value gap, this is simply a FOMO setup if you missed this setup. There's no reason to be taking this setup here. Now, I also just wanted to include this before moving on. Let's say that we have the same example here where we have our high time frame manipulation, where we then get our initial distribution, creating a 5-minute bearish fair value gap, which is sponsored. This is good. This is sponsored from our high time frame manipulation, where off of this 5-minute bearish fair value gap, we then displace lower and create another 5-minute bearish fair value gap. And let's say for this example, our sell side liquidity objective is still intact, okay? You do not need to be settling for this, okay? You can see that this right here is sponsored from our high time frame manipulation. This is good. And if you missed this, you don't need to settle for this. This is, quote, sponsored from low time frame, quote, manipulation. This is bad, okay? There is going to be times where this does end up playing out, but truly, this setup right here is low probability, and the only reason you are taking it is because you have fear of missing out off of missing this initial move, which was high probability, okay? So don't settle for less in your trading. If you miss this setup, just move on. The markets will always be there, and you can always find more and better opportunities. Now, this is going to be my last diagram example that I go through before going on to some real chart examples. But what I want to emphasize here is how this whole move lower off of our high time frame manipulation is sponsored, okay? So what I'm trying to emphasize here is that we have two 5-minute gaps, okay? So let's say we have a 5-minute unmitigated gap here, and we now have this 5-minute fair value gap here, okay? Let's say that off of our initial displacement, we then get a retrace into this 5-minute gap. This is sponsored, so this is still a good continuation setup, and this is high probability. It's okay if we still have another unmitigated gap above, because this whole move is sponsored, right? And once again, if we end up getting our initial displacement off of our high time frame manipulation here, then let's say we end up retracing into both of our 5-minute fair value gaps, okay? Both of these examples are very good examples and are both forms of high probability continuation or redistribution. So what I'm trying to emphasize here, like I said, is that the whole displacement leg created from high time frame manipulation constitutes high probability sponsorship for high probability continuation or redistribution. Now moving on to our first real chart example, just the last thing I want to emphasize before really diving into this example is that sponsorship means absolutely nothing without narrative. And this goes with pretty much all of ICT's teachings, is that nothing matters in the wrong context, okay? So now looking at this example on the higher time frame, what can we see? Well, we can see that we've swept major sell side liquidity and we are inside of a 4-hour bullish PDA. And additionally, we have a very obvious drawn liquidity above to our unmitigated new week opening gap, as well as a ton of low resistance liquidity or failure swings. So now going on to the lower time frame here, you can see that after this high time frame manipulation, we end up getting our initial distribution or displacement away from this area. Now after doing so, you can see that we create a 15-minute bullish fair value gap. So this is beautiful. This is exactly what we want to see, because this gap right here, or this displacement leg, is sponsored from our high time frame manipulation. Therefore, this is a high probability area to be looking for high probability continuation or redistribution. So now as you can see, right at market open, price ends up tapping into this sponsored gap, where we then see continuation higher. So this is exactly what you want to see. And if you miss this setup, you don't need to be settling for less and looking for a low probability trade within price action up here, okay? Now going on to our next real chart example. This is going to be a little bit different than kind of some of the stuff that I've just taught you about sponsorship, but what this is really going to do is it's going to emphasize the importance of just context overall and using discretion in your trading, okay? So you can see that right here, we get our initial manipulation where we've swept buy side liquidity inside of a high time frame bearish PDA. Now off of that, you can see that we get heavy distribution lower or displacement, right? So technically, what we are looking at is a sponsored move lower, right? You can see that at this point in time, we have also already swept a lot of major sell side liquidity. This is what we were looking at this point in time. So we've already swept a lot of failure swings and low resistance liquidity. I will say that it is true that we still do have a lot of major sell side DOLs below, right? And price is very clearly bearish here. So now this was a setup that I actually saw a lot of people take in live time, and personally I faded this setup, and I just want to explain why I faded this setup, okay? So you can see that we have a 5-minute bearish fair value gap, and we are very close to a major sell side DOL. Very close to a previous day low. So now as you can see, we get a retrace back into this 5-minute bearish fair value gap. We have also generated a ton of low resistance liquidity, and then we get this 1-minute inversion right here. It's very nice displacement away. You can see that this is a very strong candle to want to be targeting this draw on liquidity. So I saw a lot of people take a position just like this, and as you can see, they got instantly stopped out. So why did I fade this setup, right? So as you can see, I said that this whole move lower is sponsored off of high time frame manipulation. But if we look at this point in time, you can see that we have a unmitigated 15-minute bearish fair value gap above. And what I said previously on one of those diagrams is that I said we can take both or either of these sponsored gaps to look for continuation to target our objective, right? But the thing is, when we have this massive dump lower and we've really retraced none of this price action and we are in deep, deep discount of this range, and we've also swept a ton of major sell side DOLs, I want to see a true, retrace or manipulation to then look for, continued distribution here, right? So now also, I really don't want to be taking a 5-minute continuation when we have a unmitigated 15-minute fair value gap at my stop loss. Additionally, this 15-minute fair value gap is going to be in premium of the range. So as you can see, after this first setup fails down here, what ends up happening is price ends up retracing back into this 15-minute, which is also aligned with discount. So now after this massive displacement, we now have true retrace, right? You can see that this leg has now truly been rebalanced, right? This is, like I said, this is kind of me going on a rant here, but I think it's important to understand just why this is different from the other setups I talked about like this is the previous diagram that I showed you. Let's say this is our high time frame manipulation. We then get our initial distribution, and let's say we have two gaps in this leg right here, right? We have this 15-minute and this 5-minute. I previously said that taking this first one is okay in, certain scenarios. That's why this is going to be context dependent, and you need to have good discretion and understand what the market is doing, okay? Because like I said, we have already swept a ton of major sell side draws on liquidity. We are in very deep discount of this range, and we have a unmitigated 15-minute fair value gap at your stop loss. Therefore, your stop loss taking this trade is at a place we anticipate price to manipulate, which is exactly what ends up happening here. As you can see, after we then retrace into this 15-minute bearish fair value gap, you can see that we are heavily rejecting it, where we then get a 5-minute inversion. And then as you can see, that's what ends up taking us to our DOL, right? Now, also, I want to say that even if you weren't, catching this 5-minute, because of the sake of risk to reward, what ends up happening here? We get our displacement off of this 15-minute bearish fair value gap, which is sponsored from our high time frame manipulation, and then we heavily displace lower. While displacing lower, we end up creating this 5-minute bearish fair value gap, and I don't think that this 5-minute IFVG was the play of the day here. What I think the play of the day here was actually a 15-second, right? You can see that we have this 15-second, or you can't see we have this 15-second. This is not on the 15-second time frame, but you can see that we are just continuing to generate a ton of low resistance here, where we also have our major sell side DOL below and just more low resistance here. So after we get our displacement away from that 15-minute bearish fair value gap, we end up creating a 5-minute bearish fair value gap, where now you can see that we end up manipulating our internal buy side liquidity, where we now tap into a 5-minute bearish fair value gap, and we have a ton of low resistance liquidity below. And at this point in time, we actually had a 15-second inversion here. I think that this was the absolute play of the day, and as you can see, this ends up dumping to your overall sell side objective here. Moving on to our next and final chart example, this is going to be what I was saying is kind of contradictory to my last example. So as you can see, we have high time frame manipulation. Right at market open, we have swept buy side liquidity inside of a 30-minute bearish fair value gap, which is now displacing lower. So this move lower is going to be sponsored. As you can see, we have this 5-minute bearish fair value gap, and we also have this unmitigated 5-minute bearish fair value gap as well. And we have a very obvious draw on liquidity below, or sell side objective, to this major sell side liquidity, as well as this unmitigated 4-hour bullish fair value gap. So as I said earlier, on that last example, pretty much what I'm kind of saying is that on the last example, you can see that we didn't end up getting the true continuation lower until we ended up mitigating our higher up fair value gap in more of a premium of the range. But for this example, you can see that if we go into a higher time frame here, there's no unmitigated 15-minute fair value gap at our stop loss when you were taking this initial continuation. So off of this, you can see we end up retracing into a 5-minute bearish fair value gap. We are very close to our sell side DOL. At this point in time, we really haven't swept any significant or major sell side draws on liquidity. So there's nothing really here that's going to give us much resistance to continue this just being bearish here. So as you can see, we get a retrace into this 5-minute bearish fair value gap. We actually ended up having a beautiful 30-second IFVG here, which ends up delivering us to our major sell side DOL. So now just one last thing before I wrap this video up is I just want to refer back to this initial diagram. And I want to emphasize that sponsorship should not be overcomplicated. It is truly a simple concept, and this is all you need to understand. Right here, high time frame manipulation, we get our initial distribution or displacement. So this whole move lower, this one right here, from this high to this low, this is sponsored from our high time frame manipulation. Let's say we then get a retrace into this lower or this higher up fair value gap. Both are good for high probability continuation to our major objective. Now for this one, this is bad. Why is it bad? Because it's sponsored from low time frame manipulation. This leg right here is not sponsored from this 4-hour high time frame manipulation. It is sponsored from this 15-minute low time frame manipulation, okay? So that is what I'm going to end this video on. I really hope you guys learned something from the video, and make sure to drop a comment below with any questions that you have. Thanks for watching till the end. I will catch you guys in the next one.